All right, let's now look at WION's global markets and economic health check to see how the markets moved during the second week of June. Now, at the start of the usually quiet month for risk assets, crude surged by 6.2%, making it the best performing asset during the week. The volatility, though, was evident from differing bets on U.S. President Donald Trump's tariff headlines almost every other day through the month. Bitcoin gained nearly 1%, edging towards its all-time high of over $111,000. Gold gained 0.5% despite risk on bets. However, the dollar took a hit as the sell American assets trade trend continued to weigh on the currency. Moving on to the Asia-Pacific stock markets, Chinese stock led the gains in Asia with over 1% gain, followed by the OC stock index. A recovery in emerging market stocks was a distinct theme again at the start of June. Indian stocks closed in the green, showing signs of a recovery amidst the pull and push in the trade war talks. Indian stocks have been running up, with the defense sector showing the biggest gains after Operation Sindoor. Japanese stocks were an exception during the June second week as the bond auction there showed tepid demand, weighing on the sentiment. In the Americas, Wall Street extended the gains at the end of May. Stocks closed at their highest mark since February on Friday, with a 1% advance in the S&P 500, driving the gauge to 6,000 points. That comes after the benchmark index gained 6%, marking its best May since 1990. The tech-heavy Nasdaq rose 2.2%, extending the nearly 10% surge in May, driven largely by solid earnings. While Canadian stocks closed out May in the green, Brazilian stocks ended the week in red. Across the Atlantic, European stocks too performed well. German DAX once again led the gains in the region with a gain of 1.3% to extend the 6.7% rally in May. UK's FTSE rose 0.7% after the over 3% gain last month. The French CAC returned 0.7%. The South African stock index added 2.2% in addition to the 3% rise in May. Let's turn our attention to the overall economic outlook. Let's take a look at the Asia-Pacific region. Now, the Trump's trade war worries have weighed on the outlook for global economies. However, India is still expected to be the fastest growing major economy in the world, with bets of a significant slowdown easing. The Reserve Bank of India's jumbo rate cut is widely expected to increase consumer demand and, in turn, boost economic growth. The outlook for the rest of Asia, though, remain negative. For China, the outlook is still mired in doubts from the recession in its real estate crisis. However, the latest trade truce with the U.S. and the talks to begin on Monday are good signs for the economy. Japan and the OC economic outlook mirrored worries from Trump's trade war. In the Americas, the outlook for the U.S., Canada, Brazil, and Argentina shows trade tariffs are likely to hurt economic growth. For the U.S. economy, stagflation bets are still weighing on sentiment and the outlook. The economic activity expectations in Canada, Brazil, and Argentina were also cut. On the other side of the Atlantic, the negative outlook seems to be more widespread. The expectations show the clouds are darkening again for the UK and other European economies. The trade war worries continue to cloud the outlook for the region. The story wasn't very different for the African economies, where the outlook remains negative.